Hey everyone, welcome back to Corporate Decoder, the place where we break down financial reports and find the truth behind the numbers. Today we're diving into OneSolution Technology Inc.'s latest annual report, a company that's been making some interesting strategic shifts. Get ready for a closer look at their financial health and the risks they're facing. Before we dive in, if you love getting crystal clear insights from these dense financial filings, make sure you hit that subscribe button. And for even more exclusive content and to join our community of business sleuths, check out our Discord server linked in the description below. So OneSolution Technology Inc. is a holding company originally incorporated in Delaware, but its operations are centered in Hong Kong. They've had a bit of a pivot in recent times. They used to be in the smart power supply business through a subsidiary called PowerTech, but as of September 2024, they completely sold off their shares in PowerTech, marking an exit from that industry. Right after that big divestment in September 2024, they acquired Heavenly Grace Limited. This new subsidiary is now their main focus, operating in the arts and collectibles business. They are really trying to modernize this space by using blockchain technology and NFTs to create digital ownership tokens or DOTs for artworks and collectibles. Think of it as a digital certificate of authenticity and ownership powered by blockchain. Now let's talk about the money. For the year ending March 31, 2025, OneSolution brought in revenue of $76,921. That's a slight increase from $71,070,296 in the prior year. It's a small number, but it's an increase. This is where things get really interesting. For the year ending March 31, 25, they actually reported a net income of $1,948,092 and $5,074.92 of He-Fike into $7,400 net loss of $1,057,040.69 in the previous year. How did they pull that off? The net income is largely due to a gain on the disposal of their old subsidiaries, PowerTech, which was about $205 million. So while they are showing a profit, it's crucial to see how their core arts and collectibles business is performing operationally outside of these one-off gains. Looking at their actual operations, they had a loss from operations of $572,732.73, the $7 for the year ending March 31, 2025. This is actually an improvement from the $609,914 operational loss in the prior year, but they're still operating at a loss day to day. Financially, the company has a lot of common stock issued. As of March 31, 2025, they had over 6.6 billion shares outstanding. This high number of shares can sometimes make it harder for the stock price to move significantly. Their cash position is quite low. As of March 31, 2025, they had only 2,417 Ors in cash and cash equivalents. This is a very small amount and highlights their reliance on external funding. When we look at their cash flow, they used $85,555 in operations for the year ending March 31, 2025. This is an improvement from using $289 in the prior year. However, given their extremely low cash balance, any significant operational expenses could quickly drain their resources. Their liabilities include amounts due to related parties, which were $302,805 in 2025, down from $2,118 and $2,111 in 20 shareholders or affiliated companies. Now, let's talk about risks. One of the huge risks they highlight is their structure as a holding company with operations in Hong Kong. This means investors don't directly own shares in the operating company and are dependent on contributions from subsidiaries. They also point out substantial risks related to doing business in Hong Kong and China. They mention that PRC government policies can change rapidly and unpredictably, and this could significantly impact their business operations, especially if they expand into mainland China. They are very upfront about the significant oversight and discretion the PRC government has over Hong Kong companies. This includes potential intervention, influencing operations, and even hindering their ability to offer securities to investors, potentially making their stock worthless. There's also the ever-present risk related to the Holding Foreign Companies Accountable Act in the US. If the Public Company Accounting Oversight Board, the PCAOB, can't inspect their auditor, which is based in Nigeria, it could lead to their securities being delisted from US exchanges. They also mention uncertainties around indirect transfers of equity in Chinese resident enterprises by their non-PRC holding companies. This is a complex area of tax law that could impact them and their shareholders. In terms of their actual business, the arts and collectibles market can be pretty sensitive to economic ups and downs. They also acknowledge that they rely heavily on a very small number of customers. For instance, in 2025, literally one customer accounted for 100% of their revenue. Losing that customer would be devastating. The company's auditor has explicitly stated there is substantial doubt about their ability to continue as a going concern. This is because of their low cash, operational losses, and reliance on stockholder support. Essentially, they need to raise more money or drastically improve profitability to survive. So what's my take on OneSolution Technology Inc.? The company is in a very early and risky stage, making a significant business pivot. The move into arts and collectibles using blockchain is interesting and taps into a growing market. However, their operational losses and extremely low cash reserves are major red flags. The reliance on a single customer for all revenue is a critical vulnerability. Furthermore, the geopolitical and regulatory risks associated with operating in Hong Kong and China, coupled with US listing regulations for foreign companies, present significant hurdles. The gain on disposal of subsidiaries masks the ongoing operational losses. While they are trying to build a new business, the path forward looks challenging and will likely require substantial additional funding. Investors should be extremely cautious as the risks here are very high and the company's ability to continue operating in the long term remains uncertain. What's your opinion on OneSolution's future? Think their arts and blockchain venture will take off, or are the risks too great? Let me know your thoughts in the comments below. If you found this deep dive helpful, please smash that like button and subscribe for more content like this. And of course, join our amazing community on Discord, linked in the description for more in-depth discussions and early access to our analyses. Thanks for watching, and I'll see you in the next one.